Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. We're going to jump right into it here. Hope you're doing well. Thanks for joining once again. Big story this week, of course, towards the end of the week, last 24 hours at the time of recording, was Israel and Iran. Israel launching an airstrike targeting nuclear facilities in Iran. Iran retaliating drone strikes, a big escalation across the Middle East. I'm not going to pretend to know all of the intricate details and chess pieces that are moving here, but terrible from any of the innocent lives that are caught in all of this. But from a financial perspective, which is what we're here to do, the biggest market affected here is oil, is crude oil, right? Because the Middle East is all the control, the shipping routes that could be impacted here by the supply of oil. Oil ETF USO, this is a scatter plot going back over 5 years. So this is plotting just individual kind of daily percentage returns. You can see that the move on Friday here was significant, right? This is almost a 3 standard deviation event. 6-7% up for oil in a single day. That's quite the spike. If we take a look at a price chart here over the past 5 years, again, you can see oil has been pretty range bound. It's been sleepy. It's been grinding lower and consolidating for most of this year, but there's certainly a big invigoration kind of shot in the arm here for oil. And this is now something that the market is beginning to price in here. Is there going to be a disruption to the supply of oil right now? The dynamics certainly have changed. History shows that these geopolitical events tend to be flare-ups, right? Knock on wood for innocent lives. They tend to be short-lived, but we obviously don't know what this distribution of outcomes are going to be this time around this weekend. So folks are, paying close attention here. Equity markets not reacting that aggressively to the downside. It was down across the board. So the S&P 500 was only down 0.36% today. So I would call this that the market is not quite worrying about what could unfold here. It's not really pricing in a worst case scenario. It's more kind of comfortable, perhaps pricing in that this is a flare up that will be contained. And we can see that really just evidenced by the price action. Got sloppy on Friday. There was some risk off into the weekend, as obviously you could imagine, but it certainly wasn't a run for the hills, everybody out the exit door. If we take a look at the S&P 500 again, kind of tried to push up, right, and was doing well into Thursday until this news broke. It was grinding up, and it looks like we were on our path to all-time highs, but we started to break down. So we can see here on the right-hand side, we got a 3-month view of the S&P 500. We can see that there was some technical damage. We're coming back down. We broke through this little cluster of 3-day lows here, and we started to roll over, kind of broke this rising trend line. We're going to look at this price action a little bit closer towards the end of this video, but some short-term wind momentum coming out of the bull sales. But again, in terms of resiliency in the market, or at least complacency right now, I should say complacency, if we look at high yield credit spreads versus say a 10-year treasury, we're not really seeing any stress right now. We didn't see a dramatic drop towards the end of this week. We didn't see credit spreads start to blow out. We're not quite there yet, right? So the market is still kind of taking this in stride right now. The volatility index was up this week, so you did get a kind of a march up, and it was starting before the event, right? So even Monday, Tuesday, Wednesday, we were already starting to inch higher here. Volatility was kind of a little bit of a balloon underwater. It had fallen pretty dramatically, and it ended up going out into the week end here close to 21. Again, this is the path that volatility has been on for the past month or two. Now, in terms of the US dollar, this also struggling to kind of, find a bottom here. It did get a little bit of relief on Friday, but generally speaking, this was down for the week and continues to just be a tough spot, really kind of slogging sideways here as the dollar is, just a mixed bag, I think, for a lot of folks and portfolio managers, but acting as a mild safety haven here on Friday. Now, 10-year Treasury, so it was lower this week. There's a big debate now in terms of just Treasury yields and how it's acting and what it's pricing in. It's a little bit of a confusing mix and mess of different factors, I think, right now in terms of bonds. Are they safe haven assets? Do the other countries outside the United States still want the U.S. debt? The trade war implications. There's a lot going on here, but I guess from a technical analysis perspective, we are still just mostly range bound here from a broader sort of high level macro structure. So we are kind of pinned near this 4.5% level, and we are underneath it going into the weekend here. With all this going on. So in terms of sector performance, energy, as one could imagine here, was the big winner. This was, of course, benefiting from the big impulse leg up in crude oil prices. And then you kind of had a defensive tone here with healthcare, and then technology was actually the third spot on the leadership list. Financials, industrials, communication services, those were hit the hardest here. So finally got our smart trend filter indicator slides involved here. So this is our smart trend filter indicator. We have it built for TC2000 and TradingView for you users that want to get this. This measures price and volume and really, kind of looks at momentum, path of least resistance, where the strength is, kind of a easier, cleaner way to monitor, measure trends. We've got three sectors here that are still printing, kind of daily uptrends, and that's technology, that's healthcare, and energy. And energy notably turned up on Wednesday of this week. So this wasn't a Friday turned energy bullish for us. We were actually kind of in a little bit earlier in terms of this indicator, getting excited about energy once again. On the more neutral side here, these are all the sectors, the rest of the sectors basically have entered into what we call our neutral state or our choppy state, which basically just says there's some indecision right now. Cross currents are a little messy. Trends could be transitioning. Most of these sectors here were in bullish uptrends, and now we've just seen them weaken sufficiently that we're not saying let's get rid of them, but we're saying let's pay closer attention here because there are some cross currents. So that's kind of the way we're looking at the sector breakdown right now. If we look underneath the hood a little bit further, 52-week highs and lows. This is as of Thursday's data. So we're going to want to see what Friday looks like. I'd imagine we're going to see an uptick here in the number of stocks hitting 52-week lows, but we'll monitor that. We'll take a look at what that spread looks like for now and through Thursday. Again, the bulls have had the upper hand here. We've seen number of stocks hitting 52-week highs trying to expand, and so we'll see how much, again, this whole geopolitical uncertainty here now throws a wrench in the otherwise cool, calm, collected uptrend that we've been in. Percentage of stocks above a 20 SMA kind of still hanging out here around 60%, not much to say. Put to call ratio, again, kind of grinding in the middle towards the mean, so not a whole lot to say about this either. If we look at Bitcoin, so Bitcoin held up pretty well this week. We had a pretty good tail on Friday's session here, getting down to about 103. Didn't stay there too long. Again, I still think this 106 area is an important one. We launched above it earlier in the week, right? Got an exciting kind of momentum break. Again, that goes to show you how much that 106 area was important, kind of a left and unlock in an air pocket for the market to really break out. But then it sort of chopped around, kind of couldn't really get some momentum over that 110 and then rolled over into the end of the week. So for me, Bitcoin, I mean, it seems like in the short term, it's just consolidating. It's going to be choppy. It's going to be messy. And right now, I'm still paying mostly attention to that 106. But of course, now the 110, 112 highs are going to be the momentum unlocks for us. Gold. Continue to love it. I think most people are still sleeping on it. It still looks good. It's starting to break out here. I am terrible at drawing with a freehand mouse, but you can see here as this tries to make some moves, this is acting as a safe haven asset in all of this turmoil. It's been acting as a good, kind of risk off, basically safe haven place to park capital, to appreciate capital all this year. And I think everything we're seeing right now is almost just adding more kindling to that fire. Gold miners, again, like this spot as well. And we have new highs here into the weekend. World stocks minus the US. So again, we've been kind of highlighting the strength here, but notice the break of trend. We had this gap down. So again, you know, capital markets overseas not immune to everything that's going on in this world as well, and we are finally seeing again a little bit of a change of momentum, kind of a pull down here and reset of that trend that we've seen in many of these, you know, strong equity markets and this strong rebound off of the April lows. Upcoming econ events next week. So we've got FOMC. It's not really a live meeting. I don't think there's any, you know, I don't think there's any expectations that the Fed would adjust rates next week. I think it's mostly going to be comments. It's going to be FOMC minutes, and we have some retail sales data as well earlier in the week. So that's pretty much it from a, you know, from prepared slides here. We're going to look at TC 2000. I also want to show you a little bit of something that I've been working on here. This is two coding projects that I've been kind of, you know, at pretty relentlessly here. And this is our active swing trade long ideas. This is our quant swing list. This is our best ideas list, as I've been talking about. And these are kind of the 5 stocks I've identified here, again, going into next week, looking for trade opportunities. This is a long biased list. We have lots of uncertainty right now in the market, right? So again, you got to keep all of this in context. If we do get a, you know, worst case or a bad case scenario, if we have escalation over the weekend into Monday, then throw out your long ideas, because you're mostly going to be waiting for cheaper prices here. But there are 5 stocks we're going to look at. This is updated on Trader's website. This is not live yet, so this is still a dashboard that I'm working on, but it's quite interactive. It's got historical win rates, back-tested results, sortability, exportability, all kinds of fun stuff that I will be talking about more. So let's jump into TC 2000. Let's look at some specific price action levels. We're going to look at these charts, a couple of other things, and we'll call it a weekend. All right, so real quick, touching on some of the big price action levels here for the S&P 500. You can see that, again, we did lose some of that momentum on Friday here, and we started to break below this little 3-4 day range that we were in for the start of the week effectively. So the way I'm sort of viewing this right now is this is going to be a good test of the market. It's going to be a good test of dip buyers. Can they stay in established and maintain the established trends that the market has been in? Because from our outlook, this has still been a market that you want to stay invested in, to try and lean into, to try and ride out the potential all-time high retest targets, and then sort of recess price action and the reaction once we get up to those prior levels. And so now, with the events unfolding over the last 48 hours, let's call it, that throws a little bit of a curveball to us, and it's going to make us kind of wait and see here if the market is going to stay supportive. I think a lot of that is just going to be dynamic based on, again, what happens this weekend, and hopefully, you know, knock on wood for the innocent lives in the crossfires of all of this, it does not escalate. But that's what I think is going to really be hinging on this price action here. I mean, if we can really get a contained situation and there's some pause and agreements put in place, then I would expect markets to springboard back pretty quickly here and potentially violently. But that's not, you know, that may not be the case, right? That's one outcome of many that could unfold here. So S&P 500 seeing a little bit of turbulence. The NASDAQ 100, I mean, really from a price action perspective and a short-term isolation kind of view here, this does look like it's broke and, you know, kind of weakened in its stride here, right? So again, if you take a look at the last 5-6 days, it's been grinding with very lethargically, let's call it, right? Not a ton of energy here. It's been just, you know, again, grinding, I think is the right word. And now we got a, you know, uptick in volume. We got a pickup in range. We got a gap down that closed in the bottom quarter of the range. These are all sort of hallmark kind of reversal signs here. It shows that a change in at least short-term trajectory is on the horizon. So we do want to respect it. We do want to understand that we are now thrown off trend and we are in a potentially risk manage and wait and see mode. And depending on your trading style, you may be taking action immediately now or, on Friday into the weekend. Or if you're longer term, if you're, position trading, trend following, this is all still pretty harmless right now in terms of the price action that's unfolding. So let's keep a close eye on it. We definitely have days to take notice here on Friday. Same goes for the Russell 2000. Big uptick in volume. Got to pull back, kind of coming back in and testing and challenging these prior highs that it just broke out from. So again, everything is kind of on wait and see mode into next week. Now, with that being said, there are some things that had some big moves this week. So Oracle was one. So Oracle had earnings out this week. This was a huge move with big volume. Take a look at the weekly chart of Oracle here. This is partly why technology did so well, but this had a 24% move to the upside, expanded to all-time highs, kind of an old sleeping giant that is really kind of coming back and seeing lots of momentum behind it. So that was interesting to see. We also had the Circle IPO this week, which for those unfamiliar with it, this was a very large IPO that finally came to market here. This is crypto. This is stablecoins, one of the largest issuers of USDC. And so they had their debut this week. That stock performed well, particularly on Friday, had this nice second leg up while the market was down. Noted on Friday, this was up 25%. And I think off the heels of that was the news that Amazon and Walmart would be exploring stable coins for their core business, whether launching them or utilizing them. And basically the really short sort of TLDR there is that stable coins will potentially cut out the fees that a MasterCard noted down 5% on Friday, and a Visa charge for processing payments, right? Because stable coins direct from consumer to customer, or direct from business to customer, will certainly cut out a lot of fees and could trim some fat and could compress a lot of what Visa and MasterCard charge, and Amex and everything else. So that, I think, was interesting. Those were some of the bigger stories that I think were worth calling out. In terms of our quant swing list, again, coming from our website here, these are just the 5 that I favorited. There's 50 names or 52 names. This is of Thursday, so I'm sure some of these got dropped off the list after Friday's sell-off. But let's take a quick look here. So we got our first name that I think looks interesting. This is NewScale. Again, this is not a new name on our watch list, but this is something that I think, again, is interesting. I'm not sure if this is one I talked about last week, but we basically broke out to all-time highs here. It based out, and then it kind of went again here on Wednesday of this week. And so now it's kind of checking back here. So there's, back and forth, technical kind of trend up. It's volatile. If we take a look here at some of our back-tested statistics on the signal, so technically we've been in this, the model here that we're showcasing has been in the stock for 34 days. And you can see it has a 40% batting average, which is not that high, but when it hits 3 times larger on average. So NewScale, I think it's just interesting here as this sets up. I'd watch it pull back. I want to see levels hold. I want to see trends hold. Once again, these are long ideas, and I'm not going to necessarily be rushing out to put on a ton of risk right now, personally speaking, just given everything that's happening, in the world right now. So I want to be a little patient, selective, smaller position size, wait for stocks to come to me. That's kind of the way I would discretionary sort of look at some of these swing trading opportunities. HIMS, again, one that's been on for a while now, big winner last year, continues to perform. This has got a very tight actionable range here, so this could go either way. This is breakout watch, but we do know that the trend is up here and we've got momentum behind our back. So ideally we would get a breakout and a push over this $60 area for some type of signal, for some type of momentum to get going. VST, this one again, utilities, power demand, AI. VST continues to just work in this type of environment. AST, this one's impressive. This one's on here solely for strength. I mean, I think you need to look at this dollar volume traded this week because this is kind of off the charts levels minus some of the action here in August, and then just look at the $23 to $40 70% 10-day move here. I mean, that is impressive. It's stretched. It was up 23% this week. It's trying to emerge out of a base here. It's trying to clear above these highs. So I think that's just generally a strong stock to pay attention to. Again, I'm not necessarily willing to chase it, but it's working. Last but not least is Next Tracker. I think I posted about this in social. This has been kind of digesting nicely, starting to lift up. Bullish engulfing day, slight uptick in volume on Friday, good relative outperformance. These are all just momentum, high flying, high beta names that I think are interesting. So that's what I got for this week. Hopefully you did well out there. And as always, thanks for tuning in. We've got links in the description of this show. Thank you so much for tuning in. Have a great weekend, and we'll see you back here, hopefully, in the next video update. Take care.